let's get started. First off, I have no financial interests, I have no sponsored links on my videos. This is just for educational purposes. Please always check the description of the videos for additional material. With my first two videos, XRP, the big picture, and ILP, all the money, I may have triggered your appetite a little bit. This video will make you really hungry, because I'm trying to explain why I think XRP has to reach high prices, and by high prices I mean 4-digit prices. However, this is no financial advice, so do your own research to back up your investments if you think about investing into XRP. An additional note, I want to tell that my important videos I'm creating closed captions in 4 languages: English, French, German and Portuguese. So feel free to share links to my videos or to my channel with people who speak those languages. If you're new to XRP, I recommend you to watch my first 2 videos, XRP the big picture and ILP, all the money, so that you have a strong foundation to understand of what I'm going to talk about in this video. While I was talking mostly about interoperability in my video ILP, all the money, in this video I will be more talking about cost. On the screen you can see the 6 reasons why the Nostro accounts banks have to have in the current, in the traditional payment systems are so expensive. While RippleNet, or more explicitly Xcurrent, addresses foreign exchange, payment operations and Basel III compliance, the use of XRP can address the cost which arises on liquidity, on treasury operations and on currency hedging. While those terms sound rather cryptical and are highly financial terms, let's stick with the notion that Nostros are expensive and that the target of ILP and RippleNet and XRP is to get rid of the Nostros. A short recap on what a Nostro account is. Let's say I'm in Switzerland and I want to pay or I want to send money to the family of my wife in Brazil. So they would want to cash out Brazilian real. I, however, want to send Swiss francs. So my bank needs to have an account in the bank of the family of my wife in Brazil in real, such that the bank in Brazil can pay out the real to the family of my wife. Enter XRP. Now this is way oversimplified, but just for you to get the concept. In the future it'll be like that. My bank in Switzerland buys XRP with the Swiss franc, because XRP is decentralized and is rather fast. It can be sent to Brazil within seconds to the bank of the family of my wife. That bank in Brazil will sell the XRP for real, such that the bank can pay out the real to the family of my wife. As you may have noticed, in this scenario my bank doesn't need to have the Nostro account, an account on the Brazilian bank in real anymore, because it uses XRP as a bridge asset between the Swiss franc and the Brazilian real. Well, now let's talk some figures, and I hope you won't be intimidated by those many zeros you'll be seeing. When XRP was born, 100 billion XRP were created. 100 billion. A 1 with 11 zeros. 1 XRP is divisible by 1 million. Those smaller pieces are called drops. So 1 million drops make up 1 XRP. This 100 billion is actually decreasing because each transaction costs a few drops, and there is about, I think, 8 to 10 different transaction types on the XRP ledger. A payment transaction, I think the minimal cost is 45 drops. Now let's look at some real figures. SWIFT, the traditional system, is supposedly transacting about 5 trillion a day. That's a 5 with 12 zeros. Now let that sink in. You need to put your big boy pants on. Now you could argue 5 trillion needing to be transacted with 100 billion. Even if every XRP were used just once per day, a dollar price of 50 per XRP would already be sufficient to move the 5 trillion. The previous calculation, 5 trillion divided by 100 billion equals to an XRP price of $50, is not sufficient. I have made other videos where I explain why this calculation doesn't work out well. In this video we will look at the most simple explanation why XRP price actually needs a 4-digit price if high value payments are to go through the system. This simple explanation works like that. David Schwartz, the CTO of Ripple, has in the past in several social media confirmed that at the current price, which is below $1, low value, high volume payments are not a problem. However, we're looking for high value, high volume payments. Now let's take a look what that actually could mean. Through various researches I have done, I came to the conclusion that an upper limit of $10,000 is equally sufficient to assume the maximum value for a low value payment. On another research I have done, I figured out that there are payments which are larger than $1 billion. As a matter of fact, in Europe, in the European system, over 200 such payments go through the system every day. Because I don't want to make you crazy about price, let's do the conservative calculation. Let's take the upper maximum for a low value payment and a rather conservative value for a high value payment. 50 million. The factor of 50 million divided by 10,000 is 5,000. If we apply that factor to the current price, which is around 30 cents, then we reach easily a dollar price of 1,500 per XRP. And that's a very conservative estimate. As I mentioned before in other videos, I show different perspectives which have basically the same result, that a 4-digit XRP price will be needed in the long run if high value payments are to be sent through the system.